This is Ramkumar. First, we look at the disclaimer. I'm currently not registered with any regulator in India like RBI, SEBI, etc. The remaining part of the disclaimer you can read at leisure in the screen in front of you. Now, in this episode, that is the 40th episode of the Educative series, will be a commentary on IPO on the issue of National Securities Depository Limited, that is NSDL. Now, more about the issue details. The anchor investors are allowed to invest on 29th of July 2025. The issue as such is open for all the investors between 30 July 2025 and 1st of August 2025. The minimum application in terms of number of shares is 18 shares and the floor price fixed is 760 rupees while the upper cutoff or the cutoff is 800 rupees. If you consider this, the minimum money that you have to invest in for a minimum lot is rupees 13,680 at the lower price and 14,400 at the upper cutoff price. The issue is for 5 crore 1 lakh 45,001 shares of rupees 2 each. There is an employee reservation of 85,000 shares and the employee gets a discount of 76 rupees on application. Now look at the financials of the company for the last 3 years, that is 2023, 23-24 and 24-25. So in terms of revenue, they made a revenue of 1021.99 crores, followed by 1268.24 crores, followed by 1420.14 crores. So if you look at the difference between 23 and 25, they have increased by 14.86%. In terms of profit or profit after tax, it is 234.81 crores, followed by 275.44 crores, followed by 343.12 crores, giving an increase of 28.82% for the same between the same 2 years, that is 23 and 25. If you look at the total assets, it's 2093.47 crores, followed by 2257.73 crores, followed by 2984.84 crores. So here you can see an increase of 34.73% over the last 2 years. Now if you look at the EPS, that is earnings per share, on a consolidated basis, it is rupees 15.13. So if you factor the floor price and the upper cutoff price on this EPS, then the PE multiple would be 50.24 to 52.89. Now we'll talk a little bit about the company. The registered office and the corporate office of the company is located in Mumbai in Maharashtra. The company has appointed BRLM, that is Book Running Lead Manager, to be ICICI Securities Limited, Axis Capital Limited, HSBC Securities and Capital Markets India Private Limited, IDBI Capital Market and Securities Limited, Motilal Oswal Investment Advisors Limited, and SBI Capital Markets Limited. The RTA for this IPO is MUFG In Time India Private Limited. The underwriter has not been declared as yet. It will be decided and declared before the RHP is filed with ROC after the IPO process is complete and the allotment is done. This will be listed in BSE. This company was founded in 1996, soon after the issuance of the Depositories Act. The current MD for this company is Mr. Vijay Chandok. The company is in the business of depository and the depository itself is a duopoly market with only one competitor being CDSL, which itself was listed in 2017. The company works in a highly regulated environment, which is regulated by the current capital market regulator SEBI, that is Securities Exchange Board of India. So any decisions, changes in operating business rules, bylaws, tariff, that is a fees to be charged to the clients of the company, etc., has to be run through or sought approval from SEBI. The company directly does not deal with the end customer but deals through a network of DPs, that is depository participants. The company also deals with the RTAs, that is register and transfer agents, and issuer companies for certain businesses like e-voting, etc. The company has presently 2 material subsidiaries called NSDL Database Management Limited, that is NDML, which is primarily into the KRA business and insurance repository business. And the second subsidiary is NSDL Payment Banks Limited, which is bank. The objects of this particular company is not required to be stated, as it's a fully OFS, that is offer for sale kind of an issue, where the money whatever is issued received through the IPO will be received by the participating shareholders. Since it is a 100% OFS, there is no monitoring agency required to see the outflow of funds received through the IPO. Now, if you look at the track of government, regulatory and policies, since this company is in a highly regulated environment, regulated by by SEBI, one of the subsidiaries is regulated by RBI, the other subsidiaries are regulated by other regulators like IRDAI, etc. The company is very much controlled by the rules and policy changes of the government. Secondly, since the company is a indicator of the barometer of the Indian economy, it's a institution that is very important. So any slip up by this institution is taken up very seriously by the regulator concerned. To that extent, this company has to be on its toes as well as maintaining systems and processes and procedures are concerned. Now, if you look at taxes and tariff, there is no special tax benefit given to this company. However, one of the subsidiaries, that is Payment Bank, NSDL Payment Banks Limited, has got a 50% benefit on the GST that is being paid by way of them being able to neutralize that. So except for that, there are no other tax benefits given to the company. There is no tariff also separately applicable except for the existing taxes and tariffs that is applicable to every other company which is in this space. The company has to really be ahead in terms of the deployment of IT, that is information technology. Since the important aspect of running of the company or smooth running of the company is in IT, and also since the company is in the forefront as far as the economy is concerned, there are quite a few attempts made by the agencies, foreign agencies or foreign entities, in trying to disrupt the normal day-to-day functioning by way of cyber attacks, etc. So the company has to be really strong in terms of ensuring that the IT is kept very strong and up and running, and it's always on its toes. Also, regulatorily, they are required to report any deviations with respect to not being able to cater to the timing. If you look at the prospectus, there are quite a few instances that they have mentioned the last couple of years where they have been found wanting. Of course, they have been able to up the system in reasonably good time, thereby creating no hiccups or issues in the market for the participants or for the investors. The companies mentioned that there has been a negative cash flow, and then the companies also mentioned that in case they are not able to come out of this negative cash flow situation, there could be issues with respect to the company being able to maintain profitability. In terms of revenue, the revenue is purely a transaction based. For bulk of the revenue received from the depository as well as from the bank, it's based on the number of transactions, which indirectly translates to the buoyancy in the market. To that extent, the company is dependent on the buoyancy of the market or the delivery volumes in the market. The company does its business through a network of DPs, that is depository participants. So if you look at the last 3 years, the top 10 depository participants, that is the DPs, have given a business of 17.55%, followed by 17.10%, followed by 15.15%. So the top 10 clients of the depository has given a business to the extent of 15%, which is very, very healthy in terms of not having any concentration risk. In terms of customers, the investor base is to be maintained by the depository. So indirectly, all the investors are maintained with the depository through the agents, that is the depository participants. Also, the company needs to continuously invest in technology to ensure that they give value-added services, which includes the other two subsidiaries, that is the payment bank as well as the database management system. This will ensure that there is a convergence of activities between the three businesses, thereby allowing the customer or the client to effectively do his transactions on a single sign-on basis wherever possible. In terms of offerings, the company needs to, as we mentioned earlier, needs to invest heavily into technology, and hence it is technology heavy. So they have to be always on the lookout for new technology to ensure that the system becomes faster and easier to operate from the convenience perspective. And failure on the IT portion in terms of technical snags, etc., is seen very seriously or viewed very seriously by the regulators, SEBI, RBI, etc. So the company has to ensure that the systems, whatever changes take place in the systems, they have to take place with while ensuring that the system is up and running almost 100% of the time. The company's registered office in the corporate access is owned by them, and it's situated in Bandra Kurla complex in Mumbai. There are quite a few branches of the company which are on rent or on lease. Now we look at the quality and operations. As we mentioned earlier, the IT, although changes have to be done based on the requirements given by the regulator, they have to ensure that the operations are kept smooth without any hiccups or hanging of the system. So the quality, topmost quality has to be maintained in terms of deliverance of quality services through the IT system or IT stack used by them. This includes both software, that is application, as well as the hardware, as well as the network. So it's a whole gamut of activity from IT point of view that needs to be kept up and running and smooth. Also, there is a requirement for the company to have primary site, which is located at the where the servers are located in the main site. Then you have to have a DR, that is disaster recovery, which will be located in some other site, which should be at least some 600 700 kilometers away from the primary site. And also, as per the rules, you need to have a near DR, that is near disaster recovery. So this will be somewhere close to the primary site. So it might be somewhere in a different data center, but within the same location within a few kilometers, maybe 10, 15, 20 kilometers of the primary site. This is a requirement from the SEBI point of view to ensure there is continuity of operation irrespective of the issues with respect to at least 2 of the 3 sites that are there in question. In terms of insurance, the company is adequately insured. However, there could be instances where there is a huge amount of insurance put on the company, thereby putting pressure on the profitability of the company. This is what has been mentioned by them in the prospectus. Now, in terms of non-compliance, there are quite a few non-compliances which mainly deal with the TDS of the subsidiary, that is NDML. There are a few non-compliances related to the main company, that is NSDL, which is coming out of the IPO, as well as the bank. But over all these non-compliances have been dealt with by the company, as is mentioned in the prospectus, and they have put effectively internal controls to ensure that such things do not happen in future. The companies in the course of the business needs to have agreement with the DPs, depository participants, who are their agents, the RTAs and the issuers, to ensure that they get the issuers admitted and the ISINs admitted in the company. There has been no pre-IPO issuances before the prospectus was issued. We have summarized the RHP and placed it to you for your perusal. This is meant to be purely an educational exercise to make the viewer aware of the pros and cons of the financials and the strengths and weaknesses of the company. In light of the above, there is no reference to the correctness or otherwise of the price on offer, prevailing grey market price, possibility of listing, day earnings, etc. Should you find this video informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel. Doubts, queries and suggestions, if any, may please be sent to me on ramkbharosay@gmail.com. Thank you.